What's up everybody, welcome to the Stocks channel. My name is Corey and today we'll look at weekly charts of all of the indices, the VIX and Bitcoin, and try to decipher where the market is trying to go from here. First up, let's take a look at a weekly chart of the SPX S&P 500 index. So let's crack open this chart and see what's going on in the stock market today. Alright, so remember these are weekly charts, so every candle is one entire week's worth of price action, and you can clearly see on this weekly chart of the SPX that we are still in a downtrend. And lately we have been starting to build up a base around this critical support zone on SPX of around 37 to 3800. Now you can see we did close the week red, but we did see a lot of buyers of the dip on that Friday close, and that is why we have a large wick to the downside in this candle. So you can clearly see that we're starting to lose a lot of that bearish momentum and build a base of support right around 3800. So it is possible we could be due for a counter trend rally off this support. Now the likely zone of resistance to get a counter trend rally to is going to be right around 4000 to about 4040, and that is going to be very strong resistance, and it will still be a lower high below the previous high at 4158. So you do need to keep in mind that as long as we're in the downtrend and the bear market, every rally is likely going to make lower highs before the next lower low, and we still do have a valid price target down there at 3500. In the event that we've already seen the bottom, which I severely doubt, we are going to see higher lows and higher highs, and we are going to see price action breaking out to a new high, and we are going to develop the bull trend, and then we could start to say that possibly the bear market is over. But when you follow price action and trend, you need price action to confirm it. You cannot just have a gut feeling. And until we get the breakout above 4158, we are still in a downtrend because we are still forming lower highs and lower lows. Now, if you want to get bullish in the short term, you have great risk reward ratios at these prices because you are either setting your risk at 3800 or 3700, because if we break down below the previous low at 3675, we are very likely going to have enough selling pressure to get down to 3500. So keep in mind, it is possible that even if we get this counter trend rally, that we still come down in and put that final low, possibly even lower, which is going to be right around 3500. So just because we start to bounce from here, you still need to respect all resistance levels while you're in a downtrend, because bears will show up at those levels. And because this is a strong bear market, do not expect bears to just roll over and give this market away to the bulls unless there is a very strong catalyst that sends the bulls back into action. But right now we all know the market is bearish, and we know everybody is bearish, and for good reason. But keep in mind, if everybody does get overly bearish, we are very likely going to get these counter trend rallies. And right now I do believe that there are just way too many people with bearish sentiment already expecting the stock market to crash down for that next leg lower. And when everybody already is aware of something and everybody can expect something ahead of time, the market has very likely already priced it in. So if you're new to trading and investing, you need to start learning that the market is very efficient and it's always forward looking. So if you know something, it's very likely the market already knows it as well and has already priced it in. So keep that in mind when you start getting these bearish observations or bearish theories on why the market is likely going lower. It is very likely the market already went lower because of those very same reasons, and the market probably knew it before you did. So that it's very clear there are buyers of the dip, and that is why we have seen the market stabilizing for 5 weeks around these prices. And when you let the bulls hang around long enough in a downtrend, they're going to try to reverse that trend. So I do expect to see a continuation and a push up to about 4000 or higher. We'll cross that bridge when it comes if we get the bullish breakout, but right now it's very likely that we're going to trend up to at least that lower high resistance before we continue to see any more downside. And it's still very likely that we get down to SPX 3500 sometime this year. So you need to remember this is still a downtrend until it's not. On the bear bull survey, you can see there's just way too much bearish sentiment, and we're still over 46% of the people that are bearish, even though we are starting to see an increase in bullish sentiment. Almost 27% of the people that are now bullish. We have had way too much bearish sentiment, and that is likely why the stock market is starting to stabilize. Remember, when everybody stacks up to one side of the trade, it is very likely that the market is going to create the max pain possible and go in the opposite direction. So keep in mind, if you are overly bearish, you need to be watching those SPX support levels, because those levels need to break to get that next leg lower. And as long as we are above those levels, we could continue to see a counter trend rally. So pay attention to the bear bull survey, but obviously put price action first, because price action is king. Use this as another indicator that is just a tool, and do not just assume the market has to go higher because too many people are bearish. But it is very likely that if too many people become bearish, that it is a good time for the market to rally. You can also see on the fear and greed index that we're still near extreme fear readings down here right around 27. So it is possible that we go somewhat to more of a neutral or greed reading before we get the next leg lower in this bear market. This doesn't guarantee anything, so as I just said, follow price action first and foremost. But do keep in mind that a lot of people are fearful and a lot of people are bearish at this point in time, so do not be surprised if the market goes against the trend. On the Nasdaq 100 NDX, you can see that we're also seeing that bounce around support, which is right around 11,768, and we continue to see buyers of the dip around that support zone. If we do lose this support zone, we're very likely going down for that next leg lower, which is down here at 10,589. So do keep in mind, if price action slices down through this support, you will want to start bracing for that next leg lower. But in the meantime, if bulls continue to buy the dip at this level, it is possible we get a counter trend rally. And the previous weekly high is right around 12,700, because if we break above that, we will have a bull trend in the short term, and that means the bear market could be over in the near term and we could start to see a sustainable bull rally. Remember, we follow price action first and foremost, and if we start to see bullish price action and a bull trend, we need to become more bullish, because that is the definition of letting price action do all the talking. We don't follow noise and we don't follow news, and even though there's going to be plenty of bearish news around us for years to come, always keep in mind that every bear market bottoms on the worst possible news. You're never going to get to a bottom in the stock market on good news. So by the time good news comes out, the market is likely already going to be in a bull trend, and you're already going to have seen it in the price action, and that is why we follow price action first and foremost. So there's no other way to put it. If we break out above that high, that is bullish, and then we will start to develop that bull trend. We're also going to have strong resistance right around 13,300, which is also the top of this downtrending channel. So those will be your critical resistance zones to pay attention to. As far as support goes, there's really just this one down here at 11,700. And if we lose that, prepare for the next leg lower, which is about 1,000 points lower. On the Dow Jones weekly chart, you can see the same exact sign of buyers of the dip around that support zone at 30,000, and you can clearly see that we're starting to develop a base around that support, and we have clearly bounced off of that Fibonacci level right around 29,800. Now we still do have this gap to fill down here at 28,500, and it is very hard to believe that the bears do not want to go down there and fill that gap, but we have no idea when that gap is going to get filled or if it's going to get filled at all, even though I do believe that gap is going to get filled sometime this year. But just remember, we could easily get this counter trend rally and then go fill that gap later on in the year, so keep in mind that we could go up in the short term and still be going down in the longer term. These are macro charts of weekly candles, and it is going to take many months for all of this to unfold and for this market to eventually hit a bottom. We don't know if the bottom's in yet, but it's very unlikely that the bottom is in, so just keep that in mind. And the strong resistance in the Dow Jones is up here right around 33,272, and if we break above that, we will have the bull trend. Another resistance just ahead is right around 31,512, so watch that level as well, because if we break above that, it will be a short-term bull trend of a higher low and a higher high. As soon as the Dow Jones breaks down below about 30K, we're very likely going to fill that gap below, so that will be your extremely critical support zone. On the Russell 2000 weekly chart, you can see the Russell 2000 is also building a base of support right around 1700. So as long as the buyers of the dip are out there buying the dip around this support, the bears are not going to be able to easily send the market lower. On the Russell 2000, if we break below 1700, the next leg lower will be down there at 1578 and 1536. So just keep that in mind, that if the Russell 2000 breaks below 1700, get ready for that next leg lower about 150 points lower. Now, if we hold this support, the next likely resistance zone would be a bounce all the way back up to about 1888, and the near-term resistance right around 1770. If we continue to see buyers of the dip and building this base of support, we could develop a bull trend. So if we get the bull breakout above 1890, that will instantly become a bullish trend with bullish price action, which means we could start to see a very strong rally in the upward direction. On the VIX weekly chart, the VIX continues to get crushed for yet another week, and we're back down to that support zone at 24, and the next likely support would be down here right around 21 to 20, because the VIX has been putting in higher lows and has been consolidating into a wedge. The VIX below 24 is a bullish signal, and the VIX spiking back above 30 will be a continuation of the bear market and send us down for that next leg lower. But right now, all signs point to the VIX continuing to get crushed and likely breaking down below 24, which means we will likely see a continuation of this bull rally, at least in the short term. On Bitcoin, we're still trading right around that support zone at $19,000, with Bitcoin currently trading at $21,000, and you can see this very clearly looks like a bear flag developing just above support, but that doesn't guarantee that Bitcoin has to break down lower. Bitcoin has to break support at $19,000 to get down there to the next price target at $12,000. And on smaller time frames, it may look like a double top, which means we will have a price target right around 16,000. If we get the bull breakout, we need to close back over 22,000, and then we could start to get a counter trend rally that could send us back up to about 28 to 32,000. If we can get above 32,000, that's the bull breakout, which will break the bear trend in Bitcoin. but that is a long ways away and we have plenty of resistance on the way for that bullish breakout. So Bitcoin is very simple right now. It's bearish below 19,000 and bullish above 22,000 and consolidating in a trading range in between those zones. On the ARKK weekly chart, we can see that ARKK does look like it's starting to put in some type of bottoming process, consolidating in this zone between $40 and right around 47. And this is where there has been a lot of accumulation volume in the past, and we're seeing that same amount of accumulation volume yet again. So it is possible that ARKK is putting in a bottom, but in order to say that the bottom is in, we need to get this bullish breakout above 48 and then continue to get consecutive closes above that resistance. That will break the resistance downtrend and the strong resistance level, and then we could say this was just an accumulation base and now we're going back into a bull market. And if ARKK does get that bullish breakout, it is very likely the rest of the stock market is going to be rallying in a bull market as well. So even though ARKK is not a market mover by any means and it's in its whole different world, if it does start to go back into a bull trend, that will tell us that the bulls are back into speculation mode and starting to buy stocks that are in the high beta phase, which will tell us that we could get a bull rally in the rest of the indices. So watch that ARKK resistance very closely at 48, and if we start closing above it, that will be bullish for the whole entire stock market. So jumping back over the S&P 500, there's only one critical level you need to pay attention to on the SPX, and that is down there at 3,700, even though in the short term, you can use a nearer risk level right around 3,800. If we break down below 3,700, we are very likely going down to 3,500, and then yes, we could continue to go lower, but that is the next leg lower in this bear market on a breakdown below 3,700. The next bull breakout will be that breakout above 3,900, and then we'll very likely run up to the top of this channel and test that resistance right around 4040. So just play it day by day and week by week, and always use great risk management. And if you're an investor, just know these critical levels and know exactly how much you want to accumulate every time we get down for that next leg lower, or just continue to average in every month, adding the same amount of money, and over time you will eventually see those profits coming in. As a trader, it's fully in your control what you're doing, whether you're shorting this market or going long. You just need to know your risk levels and use great risk management. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends you all of your buy and sell alerts directly via email and text message. Even in the bear market of 2008, Bank beat the market and had a very positive return. If you're looking for more information or want to subscribe, you can click on the link in the description of this video. I also have the Stocks Channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.